Tonight's class is going to be on the trade plan, okay? I want to go over the trade plan. This is going to be a great video for you guys to look back on and understand these 3 cycles and the phases and entry, exit points, and exactly what we're looking for, the signals. Okay, so let's get this started. I want to go over the 3 cycles, the signals for entries and exits, and I want to go over and reiterate the trade plan for you guys, so that way you guys could go back, look at the video, and help yourself there along the way when you're making the trading decisions. Alrighty, guys. So our trade plan has 3 cycles. Those of you that have been with us for a while, you know what they are. Cycle number 1 is going to be our breakout momentum cycle. Cycle number 2 is going to be our breakdown momentum cycle. Cycle number 3, this is going to be consolidation or no trade zone. Okay, so you guys are going to be able to understand this, because what we do is we are representing these by breakdown momentum. That's going to be our yellow cycle. Our breakout momentum is our green cycle. And our no trade zone, I'm sorry, breakdown momentum is the red. Let me get rid of that. And then our consolidation, as you guys know, that's going to be our yellow area. Okay, so we have the 3 cycles and the 3 phases. Okay, so I want you guys to make this very clear. When you guys see the channels in the background, these are the cycles that we're using. We have 3 cycles. So if you see that I pull up a chart and I have a green channel on it, that means that stock's in breakout momentum, and chances are the momentum is going to continue higher until we get one of the signals that's going to show a breakdown. If it's a red channel, we're in breakdown momentum. A yellow channel, we're in no trade zone. So guys, our breakout momentum, this is the area of our green channels when it's safest to buy shares, trade calls, and trade vertical spreads. Okay, now I want to show a chart in the background once I'm done here as well. So in breakout momentum, there's momentum in the market, there's momentum in a particular stock or a sector that we could take advantage of. So when you see that we're in that green cycle here, you know, here's the 1020 cross. You can see it in the background here. Once you see that 1020 cross, you know, you can see we're using the 20 as support here. But once you see that green cycle here, that green channel, that's momentum that we're going higher. Okay. I want you guys to understand this as we go along. So our breakout momentum in this cycle, we're looking for 3 key signals. Okay, we need 3 confirmations for breakout momentum. After these confirmations are met, we can initiate buying shares, buying calls, or buying call spreads, as this is giving us a bullish signal that a particular stock, market, or sector is going higher. Okay, so that first signal is the MACD line crossing. So the white line here is the MACD line, and the red line is our signal line. And we're going to be going over the charts, and I'm going to go over this on live examples. But when you're getting that MACD line crossing above the signal line, that's number 1 right here. So right here, that is number 1. The MACD line crossing above the signal line. So that's going to be your check number 1. The MACD line is crossing above the signal line. Number 2, the first green candle that is above the 10, 20, and 50 simple moving average lines. Okay, and number 3, so that's check 1, check 2, and number 3, the 10 and 20 simple moving average crossover, which is right here. The 10 crossing above the 20, that is check number 3. In breakdown momentum, you see this as the red cycle, the red channel here, and that's we initiate as BDM. This is the area of our red channels. When the market or a particular stock or sector is showing weakness, in which we can take advantage of by shorting shares, buying puts, or buying vertical put spreads. In breakdown momentum, in this cycle, we're looking for 3 key signals again. After these confirmations are met, we can short shares, buy puts, or vertical put spreads, as this is giving us a bearish signal that a particular stock, market, or sector is going lower. And here you could see the MACD line crossing below the signal line here. And we're going to go over that in the background here as well. So let me get up. So when you see the white crossing below, this is going to show you, and this is where she made the mistake. These should not be up here, and I'm going to go over that. But that's check number one, the MACD line crossing below the signal line, okay? Number two, the first red candle body below the 10, 20, and 50 simple moving average. That's check number two. Third one, 10, 20 simple moving average cross. And this is where she made the mistake as well. This should be below, but I'm going to go over the live examples with you guys in a sec. Okay, so consolidation. Here's a perfect example on Nextera. Consolidation, no trade zone. This is the area of our yellow channels that show areas of stagnation in which markets, a particular stock or sector is flat. We call this NTZ, no trade zone, which stands for no trade zone, NTZ. This is an area we are not trading. We are waiting for that next breakout or break below the consolidation area to trade again. So no trade zone. This cycle represents an area of stagnation with no real direction. Markets are flat. This is an area where traders need to be disciplined and wait for the next breakout momentum or breakdown momentum cycle to form. Advanced traders may sell short-term naked options during this time. You know, and that's something we could go over in our advanced class, because usually during this time of stagnation here, that's perfect time for option sellers for you to collect that premium and sell options instead of buy them. So here you have clear support resistance area. Candles are trading side by side, and candles trading between the 10, 20 simple moving averages. Okay, so here's a cycle example, and I would just want to put this down here, and we'll come back to this in a second. Okay, I want to show you guys this in the background. So this is what I wanted to show you guys. This is the real deal right here. So with our trade plan, guys, you know, when we're looking for breakdown momentum, you guys could see right here. Let me zoom in a little bit here so you guys could see it a little better. I'm going to start back here. So obviously the green channel here is breakout momentum. We're trading that higher. We're buying calls, vertical spreads, buying shares. Now, here's the nice thing. How did we know? Let's just say that this stock is right here. Let's just say it's on this date, and we're saying, okay, well, what do we do? Are we going to start buying the market here? Or what are we going to do? Let's just say this is today, right? Well, first things first. In breakdown momentum, you guys know that we have the MACD line crossing below the signal line. That's check number one for puts, okay? Check number two is going to be this yellow line crossing below this blue line. And check number three is going to be the first candle below the 10, 20, and 50 simple moving averages. So if we go to the next day here and you see, okay, you know what? Now you have all your criteria met for that breakdown momentum. You have the 10-20 cross. You have the first candle below the 10, 20, and 50 simple moving average, and you have the MACD line crossing below that signal line. So you have 1, 2, 3 checks. And that's what we were talking about back over here on our graph here. So if you could see in breakdown momentum, the MACD line crossing below the signal line. So right over here, you guys could see this. The MACD line crossing below the signal line in BDM, and you see that happening right here. So that's check number one. Check number two is going to be the first red candle body below the 10, 20, and 50 simple moving average. So over here, you guys could see the yellow line is the 10-day simple moving average. The blue line's a 20-day simple moving average, and the red line's a 50. So here is our first red candle below those three simple moving averages. So you have check number one, check number two, and check number three is the 10 and 20 cross below. So the 10-day simple moving average crossing below that blue 20, which is right here. So you have check there, You have check on the candle below the 10, 20, and 50, and you have your third check here with the MACD cross. When all three check marks are met, that is when you're entering into your puts, buying shares, or shorting the market. Or you could be doing vertical put spreads. Okay, and then as you see here, it continues to drop, and look at how far that drops below below that area there when you first entered. I mean, you got your signal right here on the 26th. So on the 26th here, you had your signal to short the shares or buy puts. And obviously, you guys know buying puts, you're making money as the stock drops. Now, here's the thing with our trade plan. You guys know with breakout momentum, you're climbing and then you're retracing back down to that 10, 20, or 50 simple moving average before having that next climb higher. Well, if you're in a true breakdown where the markets are breaking lower, what's happening here is you're dropping and then you're getting up to that 10-day simple moving average, and then that's acting as resistance. So you can see right here that that's acting as resistance when it's getting up to that 10. Okay, and then it's falling and dropping again, and then it has that short climb, and then it has that big drop. It has that climb from the profit takers coming in, and then it's dropping further. So right here is right where you had your entry. That's where you had your entry for puts, and your puts are making money as the stock goes lower. So if you shorted SPY right there when she's at about what 320, you're able to make that profit all the way down to right here. Now, so see, now you got your entry signal. Your entry signals, your 10-20 cross, your first candle, and your MACD. Okay, you got your three check marks. Now, where do you exit that put at? When you're in breakdown momentum, you're using that 10-day as your stop. The first candle with the full body above that 10-day simple moving average is going to be your stop. So right here is going to be your exit. All right. So you were able to capture basically from the highs here. Here was the highs on SPY right before coronavirus hit, right? So now you had that big drop for what? From February 26th all the way to almost April, from March 26th, February 26th to March 26th. And you could see that right here. So here is February 26th. That's the day you entered. You dropped, you came back up to that 10, you dropped again, up to that 10, dropped up, and then you're dropping lower. Now, what happened is you got your first candle, your first green candle with the entire body above that 10-day simple moving average. And that happened on March 25th. So for one entire month, 30 days, you were in this put. Now, here's the thing. How long of an expiration do you get for this? Okay, now when you're changing cycles, the best thing to do when you're changing cycles is get 3 to 6 months out till expiration. So right here on that February 25th, you should be getting February, March, April, May, either May or August. May or August Expo, anywhere in between there, 3 to 6 months out till Expo when you're starting a new cycle. Okay, now that's when you're exiting out of that put. It's really simple, right? So now you just took advantage of that entire cycle, that entire breakdown. And in my classes, my private classes, what I actually do is show you guys, because we could back test this and see what this option was worth, what that put option was worth on February 26th, if we got whatever expo we wanted, whatever strike. And I go over that. It's like a nice little workshop. But what happened here was you actually made over a 300% gain if you entered an at the money strike put on February 26th and you sold it on March 25th right here with our trade plan, with that first green candle above the 10-day simple moving average with that body. Now, you guys know we just went over this, right? What's the no trade zone? No trade zone is when candles are trading between that 10 and 20-day simple moving average, or the candles trading side by side and there's clear support and resistance. So now if we go back over here, where's that 1020 SMA? You see this blue line right here. This is the 20 SMA, right? This yellow line, that's the 10-day simple moving average. So now, during this whole time right here, this is an area of NTZ. You're trading between that 10 and 20 SMA. So this is an area of NTZ consolidation. And that's when you're saying, okay, now let's see if that stock's going to get up to that blue 20-day simple moving average and start to head lower again, or if we're going to have that 1020 cross and start to break higher. Now, here's the nice thing. You already had the MACD cross. And if you look at the histogram on the MACD here, you're starting to see green candles. So on this exit right here, it's just about perfect timing. You're literally 2 candles above the lowest that entire cycle was. Here was the low, right? You're just 2 candles away. And when you entered, here was your entry. And guess what? You are 1, 2, 3, 4, 5 candles away from the all-time highs on SPY. So that's the beautiful thing about our trade plan. You're able to find quick reversals and you're able to take advantage of them. So 5 days before you got that put entry, I mean, seriously, if the market's at all-time highs 5 days ago, who would be crazy enough to say, okay, I'm going to start buying puts here and make money as the stock drops lower? But that's what our trade plan has given us with that 1020 cross, first candle with body below 1020/50 SMA, and then that MACD cross. Those 3 check marks are there telling us, hey, this stock is likely to head lower. And guess what? We were just at highs right here. Here were the highs. We entered puts right here. You know, who else could call a reversal like that so quick? So now that you took advantage of that breakdown momentum, okay, it's really important to be looking and saying, okay, that's where you exited that trade. First candle with the body above the 10-day simple moving average, okay? Now, when that's happening that day, you're also looking at your signals. You're saying, okay, you know what? We got 1 check mark here. When you have that MACD crossing above the signal line, that's number 1 for a call, okay? Now, what's the next one for a call? The 10-day simple moving average crossing above the 20 SMA. Okay, there's check 2. And then your first green candle above the 1020 SMA is check number 3. Now, here's the thing. When you're in breakdown momentum, you're using that 10-day as your stop. When you're in breakout momentum, you're using that 20-day simple moving average. First candle with a full body below that 20-day simple moving average as your stop. Okay, because you know what they say, down like a rock, up like a feather. When you have momentum lower, you know, chances are it's going to continue lower until there's a shift in the market, that volatility stops, and there's some buyers coming in. So that first green candle with body above 10 is a signal to get out of those puts and lock in those profits. And if you got in that put there and you sold it here, that's over a 300% gain in 1 month. Let's show you now the breakout momentum cycle. So breakout momentum cycle here, take a look at this. Now we have the 1020 cross. We have the MACD line crossing above the signal line. Check number 1, check number 2. And now for breakout momentum, just like on our trade plan here, breakout momentum, the MACD line crossing above the signal line, which is right here. So you see what that looks like now right here. That's the MACD line crossing above the signal line. The white line is the MACD line. The red line is the signal line. Okay, and we have a lesson on that you guys could check out. Okay, your first green candle above the 1020 SMA right here. That's check. And your 1020 cross over. And that's right here, which we already have circled. So those 3 check marks represent breakout momentum. Okay. So it's really important that you understand these cycles because it's very simple to take advantage of that. So it's very easy to take advantage of that when you see that 1020 cross, the MACD cross, and then that first candle above the 1020 SMA. So now here is your entry. That's your entry for calls, shares, or call spreads. Now, here's the next thing, guys, okay? When you're getting that first cycle change, remember how we were talking back here when we were in breakout momentum and just entering into breakdown momentum? You know, I usually talk about having 2 or 3 accounts. So one of your accounts is your larger account, the other account's your active trading account. When you have this first crossover going from breakdown momentum to breakout momentum, this again here, when you have these 3 check marks and a new cycle, that new cycle is this green channel that you're seeing here. That's when you want to get something that's 3 to 6 months out till expiration, at least. Okay, so you're getting something that's 6 months out till expiration. Now, what's your entry date here? Let's see. Your entry date right here is April 6th. So if you get something 6 months out, that's obviously October 6th expiration. Now you're getting October 6th expiration. You're getting an at the money strike. So wherever this is that day, on April 6th, let's say the stock's at 260. Okay. You're buying a 260 strike call for October monthly expo. Always monthly expos. You're never getting the weekly expos. There's less volume, less open interest, and you're much better going with those monthly expirations. And I'm sure you guys know monthly expirations are the third Friday of every month. So you'd be getting the October 16th monthly expo, which is this week. So now when you're in breakout momentum, remember what I said, your first candle with the entire body below that 20-day simple moving average is going to be your stop. So if you're entering here at 260, okay, where is your stop here? Now I'm showing signs of retracement here. Just to show you guys how you can tell the first red candle below the previous candle's body is a sign that you're going to retrace back down to support. Okay. Now, where's that first red candle that's totally below the blue 20-day simple moving average? You see that's happening right here on June 24th. So June 24th, I mean, you're literally at 309. Now, with options, that came out to over a 200% return. If you bought an option here at the money and you got something 3 to 6 months out, and obviously if you got the 3-month out, you're making over a 300% return because you have shorter time frame. You have less of extrinsic value, which is time value built in. So you're making much more money as that goes higher with the shorter term expiration. But again, let's just say you got 6 months out, you're looking to make safe trades. That's still over a 200% return there from buying here on April 6th and selling when you have that first candle below that 20 SMA. You got out here on the 24th of June, but then you were climbing again. Now I'm going to show you. So you see how it came down to previous support when you retraced in this previous phase. So cycles are these. Phases are within the cycles, okay? So now you had that sell signal right here on June 24th, okay? You came down to support at 300, which was from the previous retracement here in that phase. You held that support and you started to climb. Now what you could do is look again for that next crossover, okay? And you could see along the way here, if you got out right here and you locked in that profit, okay, so here is your entry. And here is your exit. You made a huge profit going all the way up from 260 to 310. Okay, so that's one trade there. That's in your longer term account. Or if you want to be safer, you can make those types of trades when you have those new cycles forming. Now, let's say you exited out of that trade. That was your first trade that first call that you made in this new breakout momentum. Breakout momentum again is the green channel. Okay. So that's that green channel that you see. You exited here. Now, guys, where is that next entry? Following our trade plan, where's that next entry? Here's the 1020 cross. Here's the MACD cross again. And here's the first green candle after that 1020 SMA. Okay? After that crossover. So right here is going to be your second trade in that cycle. That's your second call. Now, again, when you're in the middle of a cycle, that's when I like to do shorter term trades. Okay, so shorter term trade here, you could do something a month out. You could do something up to 3 months out. Okay, so now let's see what happens here. So now with our trade plan, if you're looking at this, here was that 1020 cross. You already exited right here on that first trade. That first trade was from here all the way up to here, and you made a killing. You made over 200% return on that one trade. Okay, so you made over a 200% return on that first trade. Now you have that 1020 cross again. You have that first green candle after that 1020 cross, and you have your MACD cross. So you have your 3 check marks, and that equals entry for breakout momentum again. But again, so now, again, you're going, let's say 3 months out. So what's this date right here? On this date right here, it is, what's that? July 10th. So on July 10th, you have an entry. So you get something 3 months out. That's, let's see, July, August, September, October. So that's October. Monthly expo is the 16th. So once again, you're getting the October 16th expo. So when you start a new cycle, that's when you're getting something 3 to 6 months out. When you're in the middle of a cycle, like we are here, that's when you're getting something 3 months or less out till expiration. So on July 10th here, you're making your second trade, your second call for these longer term swing trades. You're getting into that on the 10th of July. Now, where's your exit? Here's your exit right here on September 8th. So you were able to run from 315 all the way up to about 340. And during this time here, you were up over 300% at the highs here the one time. But obviously, you guys know what happened over here. You know, stimulus deals failed. That's why it's important to listen to the news and see what's going on. So if we look at NEE, which is Nextera, this is a trade that we made. Beautiful thing about this, we did a scan live on air with you guys in the afternoon pro trader session. Okay, we found it right here on this date on it was either October 5th or October 6th. We made a call on this. We said, hey, it's breaking above this consolidation area. So as you could see on this yellow rectangle here, this yellow box, here is your resistance up here. Here is your support, the lower end. So if we broke below this, we'd be buying puts. If we break above this, we're buying calls. And guess what happened here? If you take a look, we had the SMA cluster. We had the 10 crossing above the 20 SMA. We had the MACD cross. We had check 1, check 2. Now the first green candle above 1020 SMA, and make sure it's above this support area. So we broke above that support. Right here was our entry. And guess what? We did a scan live on air with that, and we jumped in on this day for those calls. We sold it the next day for a 44% gain. So this is how important it is, because guess what? During this whole time here, look at this. From 8/11, so from August 11th all the way up to October 5th, that's almost 2 months of stagnation. 2 months you were trading in consolidation during the no trade zone and doing nothing, you know? And that's what's really important, because the reason why we had this up here is because when you're making the consolidation area, you're seeing the highs and you're seeing the lows previously. Okay, so you could see the highs right here and then the lows from this bar right here. So that's what's giving you that support and resistance areas there. Seeing where it got up to, where it got down to, where it's been trading side by side. So now you can see it's trading between the 10-20 simple moving average this entire time. You see that? When we're in breakout momentum, you see the candles are all above that yellow 10, above the blue 20, and above the red 50. When we're in consolidation, the candles are trading between that yellow, blue, and red 50 SMA. And that's the area of consolidation or no trade zone, NTZ. Now, here's the thing. The first red candle below the previous candle's body is a sign of a retracement back down to support. So Nextera here, what I'm going to be looking for is, let me get rid of that there. So with Nextera, if this comes down to about 295 and holds that yellow 10-day simple moving average, so let's just say it drops down to that 10, right? And let me draw this so you guys could see exactly what I'm looking for. Let's say tomorrow we get a red candle and it comes down to that 10-day simple moving average, right? Let's just say that's a filled in candle. Looks like an ugly candle there, but let's just say tomorrow that's our candle, right? It got right down to that yellow 10-day simple moving average. Well, guess what? If the next day we have a green candle and we're climbing above, this is going to be my entry. And guess where I'm going to have a target? I'm going to have a target of that resistance that we had from the previous high candle. So this is going to be my target profit area. Okay? So that's going to be my target profit area if we come down to that 10 and then we get a bounce and a confirmed bounce off that 10 with the green candle after that. And then my stop, if so now let's say this 10-day simple moving average, it's going like that. You know, it's still looking like that, right? Now, if I enter into that trade right here, that's my entry that you can see right here, right? That's my entry, that green candle right here. That's my entry. Okay. Now, if we get a red candle below that 10 the next day, like that, that's going to be my stop because you're dropping below that 10-day simple moving average. Okay. And since the blue is so far behind from that big breakout, I don't want to risk that trade pulling all the way back down to that blue 20 SMA down to support and then climb it again, because that's going to have a huge loss on that option. So what I'm looking for is that first red candle below that 10-day simple moving average if I'm looking for that bounce off of that support there. So if I enter here, I have a tight stop right there. And I know that if that trade goes against me, that loss is going to be minimized down to 15, 20% max. And then if we climb up to that target resistance area, that's going to be a 50 to a 100% return. So you see what I'm risking here towards the reward. So the risk to reward ratio is much better there when you're coming down to that support area and looking for that bounce off of that area. So really important there when you're in mid cycle here. When you have that new cycle forming, you know, that's something where you're taking advantage of that new cycle formation and that momentum behind it. Now, how do we find the best stocks to trade each day? Okay, every morning when I come into the office, I'm looking at a few things. I'm looking at the heat map. So over here, this is the heat map. As you guys can see, this is showing us all the sectors here. So we have financial sector, we have basic materials, we have real estate, we have utilities, you know, we have industrials, you know, and so forth and so on. So you could see just by looking at this, what sectors taking off and what sectors are lagging. So right now, the industrial sector was doing great today. You look at things like 3M, Lockheed Martin, Boeing, you know. So, and then also when you're looking at this railroads, these are your cyclical trends here during either a recession or your safe haven stocks. So when the market's pulling back, this is what you're looking at. And when you see the industrials taking off like that, you're already telling yourself, hey, you know what? Is there a sector rotation here? But getting back to this anyway, trading the best of breed. The heat map will show you the sectors that are outperforming and the top stocks in those sectors that are moving and being traded. When you analyze this heat map, add these top movers to your watch list and then use the trade plan. So every morning I'll come in and I'll say, okay, Lockheed Martin, Raytheon, Boeing, I add those to my watch list. And what I'll do is I'll just go like this. And then I look and see what that stock's doing. It's up $1 today. It's not up much. I look, do I have the 1020 cross? Yeah, I do. Do I have the MACD cross? Yeah, I do. But guess what? It's trading between the 10, 20, and 50 simple moving average. So is that one I want to trade? No. So I look at that one. I say, okay, that one doesn't meet my criteria. Let's look down here. DD, Dow. Dow is good. Let's take a look at Dow from basic materials there. So if I look at Dow, DOW, now guess what? I have the 1020 cross, I have the MACD cross, and now if I get a green candle tomorrow, then I'd have a confirmed entry. And then I'd be looking at about $51 as my target profit area. Okay. Now, this is what I'm doing every morning. I'm showing you guys what you got to get used to doing. So when you're looking at this, let's see. What's this? SYY. Let's see what SYY is doing. Okay, here's another one. You got the 1020 cross, the MACD cross. It's holding that 10-day simple moving average. Now, this is another one. If you get a green candle tomorrow, you get a confirmed bounce off that yellow 10-day simple moving average, and that would be a buy signal. And then you're trading that up to $70 a share. And that's something you could get an in-the-money vertical spread with and trade it up to that 70 for a short-term weekly trade. Then what do? We're trading momentum. So now what we're going to be doing is looking at unusual options activity. We're going to look at this mid-morning and afternoon to see what the larger traders are buying and selling. We look at their charts and see if there's anything that matches our trade plan, just like with what we did with the heat map. Anything that's coming up on unusual options activity, take a look at the chart. See if it follows the trade plan for an entry. Then what we want to do to trade momentum, top news in the market. You guys know we listen to Bloomberg, Thomson Reuters, Benzinga. Okay, market moving news is something we can use as a catalyst and utilize our trade plan to execute quick trades, either day trades or swing trades. Because if we change those charts to a today 1 minute chart, then we're set up to day trade. Okay, we have it set up now for a daily chart. So is the big thing. News, the market is totally news driven. And then upgrades and downgrades. Okay. When analysts give upgrades or downgrades, this is a great sign to watch for a move to their new price targets and ratings. Okay. So for example, here is what I looked at this morning. I came in very early this morning and I created everything for us. So you can see DocuSign here. DocuSign shares are trading higher after UBS initiated coverage with a buy rating and announced a 290 price target. That stock was trading at 240. So it's got 50 points to go to the upside, almost a 17% move to the upside to get to that price target. That's why I jumped into that. AutoZone, that's what's on our, if you guys watched our YouTube channel this morning, that was on the bottom. Morgan Stanley maintains overweight on Apple. Overweight is a really good rating. That means it's going to outperform the market. Raises price target to 136. So Intel was the other one. Remember, UBS maintains buy on Intel. They've raised their price target to $67 on Intel. So when you look at Intel, then guess what? INTC, and you're seeing Intel right now is only at 53 bucks. But guess what? If you're looking, you have that 1020 cross. There's the SMA cluster. There's check number 1, right? You have the 1020 cross. That's check number 1. Here's your MACD cross over here. That's check number 2. And then you got your green candle above the 1020 simple moving average, and that's check number 3. So your 3 check marks, that's confirmed entry for calls, right? So now you got your calls, and now guess what? You just had the analysts upgrade that target there to what? They just upgraded it to $67 right here. So if they upgraded that to $67, that's way up here, target. So now what you could do is do a longer term trade, maybe 3 months out, and trade Intel, buying at the money. Buy a 55 strike call. Buy a 55 strike call. Right now it's what, October, almost 16th. So October, November, December, January. So you get January monthly expiration, and you could get and look for that target of 67.50. And then I'm looking at our unusual options activity. So I'll do the same thing. Here's our unusual options activity. We post this in the trade room every day. And I'll say, guys, take a look. Here's the top unusual options activity. So then what you could do is you could go down this line here, see the symbol NEO. That was a great one. That one took off big time this morning, and it still continued to climb. So when you see that coming up there, that's when you're saying, okay, let me check that stock, what it's doing. And if you're seeing unusual options activity, you're seeing an upgrade, and you're seeing it in breakout momentum cycle, then guess what? That's a clear as day buy signal to buy that contract, buy those calls, buy that spread, buy the shares. That's really important there. Now, day trading is hard, okay? And to help improve our success, we must focus on day trades like today. Yes, I made a winning trade on SPY put today. I made 9% gain, but to me, that was a failure because I didn't follow my trade plan. I sold it too early. If I held on to it, Skyjack over there made 134% gain on the same trade I made. He was disciplined. He followed the trade plan. Me, I saw that stagnation, and as soon as I sold it, it started dropping quick there. But I made 9%, and I'm like, okay, let me just move on to the next trade. So day trading is harder than swing trading, and you must be focused, and you must follow the trade plan for day trades. And for day trading, I want you to focus on the daily news. Our news wire is giving us breaking news before it's released to the mainstream media. As a trader, we want to get that news before it's on the mainstream media, because guess what? If we just hear breaking news that a Boeing 737 just crashed, and we hear it on here before it's on the news, we buy those Boeing puts, we're profiting. And then 10 minutes later, it's saying, oh, breaking news, a Boeing plane just crashed. And guess what? Then the stock tanks, and we're in before the mainstream media starts shorting that stock or selling their shares. So it's really important to watch that news. The news wire is going to give us breaking news before it's released on mainstream media. And we're going to use that information to make day trades, quality day trades. And for day trading, it's really important to be patient. We got 6.5 hours every single day of trading. So you just got to sit on your butt. You got to wait for that breaking news, and you got to be patient. Wait for breaking news to come across. Wait for that news to come to you. Focus on quality and not quantity. You see a lot of traders in the trade room that'll make 20 trades a day, and then 2 months later, they're gone. They're history because they're not disciplined. They blow their accounts. And that's going to happen to you too if you're not patient and you're not disciplined. It's really important. You got to treat this as a business. Use the information you have. Use the news to make quick day trades. Alrighty, guys. So if you guys have any questions, that's going to conclude our class. That was just a little over an hour long there. So if you guys have any questions, let me know in the trade room, or you could email us, support@breakingchartalerts.com, and I'd be glad to go over any questions with you guys.